Hey everyone, welcome back to the channel. Today is Friday, April 18, 2025, and we're diving into the latest moves in global financial markets, what's been driving them over the past couple of days, and most importantly, what investors like you need to watch and consider taking action on right now. Let's start with the big picture. Markets are a bit quieter today because of the Good Friday holiday, but don't let that fool you. In trading can actually make things more volatile if any big news breaks. Over the last couple of days, we've seen a mix of optimism and caution. On one hand, there's some hope after President Trump hinted that a US-China trade deal could be just weeks away. On the other, the US Federal Reserve is still warning about stagflation, and that's keeping investors on edge. Major US indices like the Dow and Nasdaq both finished the week down over 2%, and the S&P 500 dropped more than 1%. So, volatility is still the name of the game. So, what's moving the markets today? US data releases. Keep an eye on jobless claims, and building permits. These numbers can shift sentiment quickly. Fed speeches, especially from Mary Daly today. Any hints about inflation or interest rate changes could move both stocks and bonds. Earnings season. We're in the thick of it. Companies that miss expectations are getting hit hard, so watch for any surprise results. Here's what's happening across different assets, and what you might consider. US and European stocks. We're seeing a pullback, but some investors are treating this as a buying opportunity, especially in quality, low volatility stocks and sectors benefiting from government spending. Gold, after hitting record highs, there's been some profit taking, but gold remains a solid hedge against ongoing uncertainty. Oil, prices are up on supply concerns, but be cautious. Any shift in trade sentiment could cause a quick reversal. Currencies, the US dollar is under pressure, while the Swiss franc remains strong. It might be time to hedge your dollar exposure. Bonds, yields are lower, but the risk-reward in credit isn't great right now. Stick with quality. Fund managers are playing defense. Cash levels are the highest since 2020, and gold is now more popular than stocks for many pros. This cautious stance means any good news could spark a rally, but it also means people are bracing for more bumps ahead. So, what should you do today? Stay nimble. Don't make big, aggressive moves in this environment. Scale in slowly, especially into quality assets. Diversify. Keep some gold and defensive sectors in your portfolio. Watch key levels. For the S&P 500, 5,130 is a key support. If it drops below, we could see more selling, but also some buying opportunities for the long term. Monitor the news. Be ready to adjust if there's a surprise from the Fed, new economic data, or trade headlines. To sum it up, markets are on edge, but that can create opportunities if you stay patient and diversified. Keep an eye on the headlines. Don't get shaken by short-term moves. And remember, your long-term plan is what matters most. If you found this update helpful, don't forget to like, subscribe, and hit the bell for more timely market insights. Drop your questions or thoughts in the comments below. I love hearing from you. Thanks for watching, and I'll see you in the next one.